Preparing for a fund accounting at BNY Mellon interview. You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What is fund accounting, and how is it different from corporate accounting? Fund accounting is the process of recording a fund's assets, liabilities, income, expenses, and investor capital to calculate an accurate NAV. Unlike corporate accounting, the focus is not measuring operating profit for a business. It is about valuing an investment portfolio and allocating results fairly to shareholders or unit holders. In a firm like BNY Mellon, accuracy and timeliness matter because investors, asset managers, and regulators rely on the NAV. While answering, focus on NAV, investor ownership, portfolio valuation, income and expense allocation, and why fund accounting is centered on daily investor reporting rather than operating company profitability. Question 2. Walk me through how you would calculate the daily NAV of a mutual fund. I would start with the market value of all securities using approved prices. Then I would add cash, dividends receivable, interest receivable, and any other assets. Next, I would subtract liabilities such as management fees, custody fees, tax payables, and unsettled expenses. That gives total net assets. Finally, I divide net assets by shares outstanding to get NAV per share. Before release, I would review reconciliations, price exceptions, and material movements. Make sure to cover market value of investments, cash, receivables, payables, expense accruals, shares outstanding, pricing sources, reconciliations, and the final NAV per share calculation. Question 3. What trade details are most important for a fund accountant to verify during trade processing? The key trade details are security identifier, buy or sell direction, quantity, price, trade date, settlement date, broker, currency, and related fees. For fixed income, I would also verify accrued interest. A small trade capture error can create position breaks, cash breaks, incorrect realized gains, or misstated exposure. My approach is to compare the accounting record with trade feeds, custodian data, and exception reports before the NAV is finalized. In your answer, talk about trade date, settlement date, quantity, price, security identifier, broker, currency, commissions, accrued interest, and how incorrect trade capture affects NAV. Question 4. How would you investigate a cash or position reconciliation break? I would first identify whether the break is cash, position, income, or market value related. Then I would compare the fund accounting system to the custodian or broker record and look for common causes: unsettled trades, missing corporate actions, bank charges, FX movements, or timing differences. If the break is valid, I would post the correcting entry or escalate it. I would also document the root cause, action taken, and impact on NAV. Be sure to mention comparing accounting records to custodian or broker records, checking timing differences, unsettled trades, corporate actions, FX, income postings, and documenting resolution clearly. Question 5. How do pricing issues affect NAV, and what would you do if a security price looks incorrect? Pricing directly drives the market value of the portfolio, so an incorrect price can materially distort NAV. If a price looks unusual, I would check the price movement against tolerance reports, prior day price, market data, and alternative vendor prices. I would not override casually. I would escalate through the pricing or valuation process, document the evidence, and apply approved fair value procedures if needed. Good pricing controls protect both the fund and its investors. While answering, focus on approved pricing vendors, stale prices, price tolerance checks, fair valuation, escalation, materiality, and why independent price verification is critical. Question 6. How would you account for a corporate action such as a stock split or dividend? For a stock split, I would adjust the quantity of shares and ensure the market value remains economically consistent after the price adjustment. For a cash dividend, I would record dividend income and a receivable on the X date, then clear the receivable when cash is received. I would also consider withholding tax for foreign securities. The key is matching corporate action terms to custodian postings and making sure income, cash, and positions reconcile. Make sure to cover mandatory versus voluntary corporate actions, X date, record date, payable date, position update, income recognition, withholding tax, and reconciliation to custodian records. Question 7. How are fund expenses accrued? And why is daily accrual important? Fund expenses are accrued daily, so the NAV reflects costs as they are incurred, not only when invoices are paid. For example, a management fee may be calculated as an annual percentage of net assets and accrued each day. When the invoice is paid, the payable is reduced. Daily accrual is important because investors enter and exit on different days, so expenses must be allocated fairly across shareholders based on the period they are invested. In your answer, talk about management fees, administration fees, custody fees, audit fees, expense ratios, daily accrual methodology, reversals, payments, and fair allocation to investors. Question 8. Explain realized gain, unrealized gain, and how each impacts the fund. Unrealized gain is the increase in value of a position the fund still holds. Realized gain occurs when the fund sells the security above its cost basis. Both affect NAV, but realized gains are locked in through a sale, while unrealized gains can reverse with market movements. For example, if a fund buys a stock at 100 and it is priced at 110, the 10 is unrealized until sale. These classifications matter for reporting and distributions. Be sure to distinguish sold versus unsold positions, cost basis, market value, profit and loss recognition, NAV impact, investor reporting, and tax or distribution relevance. Question 9. How does foreign currency affect fund accounting? Foreign currency affects both valuation and income recognition. If a USD fund holds a euro security, I would value the investment in euros and translate it into USD using the approved FX rate. Cash balances, receivables, payables, and trades in foreign currencies also need translation. FX movements create realized or unrealized gains and losses. A correct FX process is essential because even if the local security price is unchanged, NAV can move due to currency. While answering, focus on base currency, local currency trades, FX rates, translation, realized and unrealized FX gains, cash balances, and NAV sensitivity to exchange rates. Question 10. How are subscriptions and redemptions reflected in fund accounting? Subscriptions increase fund assets and shares outstanding, while redemptions reduce them. The investor usually buys or redeems shares at the applicable NAV per share. In accounting, I would record the cash receivable or payable and update share capital once the transaction is confirmed. The important point is that capital activity changes net assets in units, but it is separate from investment performance. Proper timing ensures existing and entering investors are treated fairly. Make sure to cover investor cash flows, shares issued or redeemed, NAV-based pricing, capital activity, settlement timing, anti-dilution considerations, and impact on net assets and shares outstanding. Question 11. What controls would you expect in a BNY Mellon fund accounting NAV process? I would expect strong maker-checker controls, daily cash and position reconciliations, price tolerance checks, corporate action review, expense reasonability checks, and NAV movement analysis. There should also be clear sign-offs, exception tracking, and escalation for unresolved or material items. At a scale like BNY Mellon, process discipline matters because many funds have tight cutoffs. Controls are not just compliance steps, they reduce operational risk and protect client confidence. In your answer, talk about maker-checker review, reconciliations, price tolerance checks, variance analysis, sign-offs, segregation of duties, escalation logs, and deadline discipline in a global fund administration environment. Question 12. What would you do if you discovered a NAV error after the NAV had already been released? I would not try to fix it quietly. First, I would quantify the error and determine which dates, funds, share classes, and investors are affected. Then I would escalate to the manager, according to the NAV error policy and materiality thresholds. If correction is required, I would support the adjustment, documentation, and any client or investor communication process. Finally, I would identify the root cause so the control gap does not repeat. Be sure to mention quantifying the error, identifying root cause, materiality thresholds, escalation, client notification process, correction entries, investor impact, and preventive control improvements. Question 13. How do amortization and accretion work for fixed income securities? When a bond is bought above par, the premium is amortized over time, reducing interest income and bringing book value down toward par. When it is bought below par, the discount is accreted, increasing interest income and bringing book value up toward par. The purpose is to recognize yield over the life of the bond rather than only at maturity. Correct amortization or accretion keeps income, cost, and NAV aligned with economic reality. While answering, focus on bonds bought at premium or discount, effective yield, adjustment to book cost, interest income impact, maturity value, and NAV accuracy over time. Question 14. How would you account for interest income on a bond held by a fund? Interest income is usually accrued daily based on the coupon rate, face value, and day count convention. I would record interest income and an interest receivable as it is earned. When the coupon payment is received, the receivable is cleared against cash. If the bond is bought or sold between coupon dates, accrued interest must be included in the trade accounting. This matters because the fund's daily income and NAV should reflect earnings accurately. Make sure to cover coupon rate, accrual period, day count convention, interest receivable, coupon receipt, accrued interest on trades, and impact on fund income. Question 15. What is the difference between trade date accounting and settlement date accounting? Trade date accounting recognizes the transaction when the trade is executed, while settlement date accounting recognizes it when cash and securities actually exchange. Most investment funds use trade date accounting because the fund gains or loses market exposure on the trade date. Cash may not settle for 1 or 2 days, so receivables or payables are recorded. This creates timing differences that fund accountants must reconcile carefully against custodian cash and position records. In your answer, talk about when economic exposure is recognized, receivables and payables, cash settlement timing, industry practice, NAV impact, and reconciliation considerations. Question 16. How are different share classes handled in fund accounting? Different share classes may hold the same portfolio but have different fee structures, currencies, distribution policies, or hedging arrangements. I would calculate total fund assets first, then allocate income, expenses, gains, and losses according to the fund documents and class rules. Class-specific expenses such as distribution fees only affect that class. Because each class can have its own NAV, accurate allocation is critical to prevent one investor group from subsidizing another. Be sure to mention class-specific fees, expense allocation, different NAVs, currency classes, hedged classes, income allocation, shares outstanding, and equal treatment within each class. Question 17. How would futures or swaps appear in a fund accounting process? Derivatives require attention because their accounting often involves valuation plus collateral or margin movements. For futures, daily variation margin usually settles gains and losses through cash. For swaps, the fund may record unrealized gains or losses based on valuation marks and recognize periodic payments or accruals. I would reconcile positions, market values, margin, and cash to broker or counterparty statements. Derivatives can create leverage, so accurate reporting is especially important for risk and NAV. While answering, focus on derivative valuation, margin, daily variation margin, unrealized gain or loss, counterparty data, independent pricing, and additional reconciliation requirements. Question 18. What reports or activities are typically completed during month-end or year-end fund accounting? Month-end usually includes final reconciliations, trial balance review, income and expense analysis, realized and unrealized gain checks, and validation of payables and receivables. Year-end adds more audit support, financial statement schedules, tax reporting inputs, and detailed explanations for material balances. I would focus on clean documentation because auditors and clients need evidence. Daily NAV accuracy helps month-end run smoothly, but month-end is where completeness and presentation receive deeper review. Make sure to cover final NAV review, trial balance, income and expense analysis, reconciliations, financial statement support, audit schedules, regulatory reporting inputs, and client deliverables. Question 19. How would you manage tight NAV deadlines when several exceptions remain unresolved? I would prioritize exceptions by NAV impact and risk, not just by count. A large pricing issue or cash break gets attention before a minor timing difference. I would communicate early with my reviewer or manager, explain what is open, and escalate items requiring external input. If an item is a known timing difference, I would document it clearly. The goal is to meet deadlines without sacrificing control, especially in a high-volume administrator environment. In your answer, talk about prioritizing material issues, communicating early, using escalation paths, distinguishing timing differences from true errors, documenting assumptions, and maintaining quality under pressure. Question 20. Why do you want to work in fund accounting at BNY Mellon? I am interested in BNY Mellon because it is one of the leading global asset servicing and fund administration platforms, so the work sits close to real market activity and institutional clients. Fund accounting appeals to me because it combines accounting discipline, investment products, controls, and daily deadlines. I like roles where accuracy has visible impact. I would see this as a strong place to build technical NAV knowledge and client-focused operational judgment. Be sure to connect BNY Mellon's role as a major global asset servicer with your interest in NAV accuracy, markets, controls, client service, operational excellence, and long-term accounting growth. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.